attending the last panel of this track. Last but not least, a full panel, 5 panelists. The SME battle is open, so we're going to try to figure out if it really is indeed a battle, or maybe a series of skirmishes, or like an all-out war. And why is it open now? Is it really open? But without further ado, I'd love for each of the panelists, maybe you can start us, introduce yourselves and what you do in your business, and then we'll launch into the conversation. So.
Yeah, perfect. Thank you. So Oliver Prill, I'm the CEO of Tide. Tide is the leading UK digital challenger in the SME space. We've got about 140,000 members, so this is unique businesses that work with us. And we're opening around 10,000 new business relationships a month.
Hi, I'm Alex, co-founder and CEO of Qonto. So similar to Oliver, we're addressing SMEs from a couple of people to probably 250 people in France, where we launched 3 years ago. And we opened also a service a couple of months ago in Germany, Italy, and Spain. We have a bit more than 65,000 SME clients, and we just announced a new Series C round a couple of days ago. And one of the objectives is to become a fully licensed bank at the end of the year. And so we're ambitioning to really solve all the pains of these small businesses that are struggling with their traditional banks. So we started with payments and everyday payments, and we'll expand to other products and services over the next few years.
Hi everyone, my name is Rodolphe. I'm the CEO and co-founder of Spendesk. Spendesk is not a bank, it's a spend management platform. So we are more software allowing employees of every business to access and spend the company money under the control and visibility of the financial team. We are addressing SMEs, more the medium-ish of SME. Today we are operating in France, in the UK, in Germany. We have around 1,500 customers. We're a team of 150, and the company started 3 years ago.
And I'm Adrian Blair, the CEO of Receipt Bank. Like Spendesk, Receipt Bank is not a bank, although we do our best to deceive you on that. We work with around 360,000 SMBs around the world. The UK is our biggest market. We have about 2/3 of our business international across Australia, US, Canada, France, of course, very important market for us. And we are a digital bookkeeping platform. We connect accountants with their small business customers and help accountants to do far more for their small business customers by automating all the stuff that they hate doing so that they can really add value to their clients.
Right, I'm Sibylle and I'm here for the hot yoga course, it seems. Right, in real life I'm the one of 2 actually CEOs of Kontist, and we are German-based banking services provider at the moment for the freelancers and the self-employed. However, in the future, we tend to be much more known as someone who merges banking, accounting, and taxation and solves certain groups like real pain points.
All right, thank you. So, in summary, we have 5 panelists that are would-be bankers in the future, would provide banking services and orthogonal services to banking and payments and otherwise to SMEs. So let me, I'm going to come up with a couple of facts, right, that are going to be helpful to open up the discussion based off of the SME battle is open. So when I think SMEs, I think traditionally poor servicing from financial institutions, right? So in the most parts, SMEs are kind of like a captive, amorphous market. They're just there, and we're going to service them, and we probably don't service them very well. So there's like an opportunity for like other service providers or other banks or quasi banks to service better that market. That's on the plus side, right? Then you have a very heterogeneous population, from like proprietorships to larger SMEs. And what exactly is the definition? Do you go all the way up to 50 million euros or pounds, or more in terms of revenue? And then the verticals are different, and then the business models are different. So it's super difficult to service SMEs, and there's probably an issue with segmentation, right? Large market, very heterogeneous. And then to add insult to injury, you have different jurisdictions, different countries, different laws, different corporate entities, right? That makes for a smorgasbord that is like almost impossible to aggregate. So from that perspective, that's the painting, right, that I'm setting up, the canvas that I'm setting up for you. Like the beauty with me not coming up with the titles is that I can criticize and critique the titles. So it's not so much a battle, right? It's not like a homogeneous market. It's a series of encounters where from one country to another things are drastically different. And at least from that perspective, it's very difficult for me to figure out that there's going to be that huge, drive towards an endpoint where you'll have a few service providers or a few banks that aggregate the entire market, be it in Europe or be it in outside of Europe. So I'd love for one of the five of you to start us off and tell me, Pascal, you're right, or Pascal, you're completely off the mark.
Pascal, you're always right. But our approach to that complexity, you're absolutely right to highlight it. It's very challenging to work across multiple geographies. And our challenge, the way we've overcome that challenge, is basically to see what SMBs across all these countries have in common, which is basically two things. One is they hate doing finances themselves. Small businesses are not interested in that. In my last job at Just Eat, we served 100,000 takeaway restaurant owners around the world, and I can tell you, because I've spent much of my life with these people, they're not interested in finance. Your kebab shop owner doesn't want to do bookkeeping. And secondly, they generally have accountants. They generally have people who are helping them with this stuff. And so our route to scale has been to go to the accountant and provide a service that they find incredibly valuable, which they then push out to their SMB clients. And because that's universal across all these jurisdictions and across all verticals, that's got us very widespread SMB distribution.
Anyone?
Yeah, maybe I'll take that one. I think one of the things you sort of, in your introduction, you said the market is heterogeneous. And, if a market is heterogeneous, the solutions have to be heterogeneous, right? If you want to serve people well. And so I think a couple of things that I think are worth noting about, I think financial services in general, which often I find surprising with, especially non-financial services investors, but specifically SMEs. So first of all, in this market, there will never be winner takes it all, right? Even in traditional markets that are concentrated in financial services, there's a limit to concentration because of regulatory intervention. And actually in the UK, one of the biggest drivers of change is something called the RBS alternative remedies, where RBS, for being bailed out, had to basically make 750 million available for players like ourselves to actually disrupt this market. So that's number one. I think there will never be a winner takes it all, and to the extent there will ever be an end game. Secondly, because the market is very heterogeneous, there's also very unlikely to be one solution. So as far as Tide is concerned, if you look at Receipt Bank, it's really the accountant route. It's people that have an accountant. When we look at our segmentation, the base segmentation is we look at people similar to that are effectively don't have a finance function. That's why we think is the most important segmentation criteria. It's actually not do they have how many employees or how much turnover they have, the sort of classic banking thing, but it's really if I don't have a finance function, that's when I'm really interested in getting my admin automated. And then secondly, 50% of all SMEs actually don't have an accounting system, so they don't have an accountant, and therefore they need to be, the bank or the banking provider, in our case, needs to pick up a lot of that stuff to make it extremely seamless. So I think there is a lot of room for seamless, for different models to thrive in this environment. And I think the wrong conclusion, at least from our perspective, would be that one model will succeed.
But Alexandre said that he's adding countries. and going after a bigger market. So do you have the same answer? Do you have a different answer?
I think probably the title should be the SME revolution is starting, but to go on towards what you were saying. But I think, I mean, in our case, we see very, very similar broken service across the 4 countries where we're operating. And the reason we chose those 3 new markets, so Germany, Italy, and Spain, on top of France, is because the European Union, the regulatory, from a regulatory standpoint, from a technical standpoint, with the CEPA region, like for several reasons, it's relatively easy to expand, and the pains that we've seen and that we've heard in those markets are very similar from the ones we've seen in France. So, and in the end, people ask me, so why do people come to Qonto? And like the answer is always the same. It's we haven't invented something crazy. It's just like a nice product, a great customer support, and a fair pricing. So if you say just like that, it seems like easy, but actually it's super tough to do that. So just to give you a very concrete example, we have a customer support that replies 7 days a week in 5 languages. An average response time is 15 minutes. No one in the traditional sector is doing that. And I won't name the traditional bank, but I sent an email to my traditional bank a month ago, to one of my traditional banks, and I still haven't heard from them. So I think it's, again, on paper it seems easy, but like doing it and actually doing the combination of all these 3 things, so like fair pricing, great product, and amazing customer support is super tough. So that's what our clients in France love with us, and that's what I hope, because it's still a bit too early to tell, but that's what I hope our clients in Spain, Italy, and Germany will also love, because there is there are differences in accounting software, in the things people use in different countries, but in the end, they just want a good service, good customer support, and fair pricing. So.
Sibyl and Rodolphe?
Yeah, actually, I'm German perspective, I'm really loving what I see in Germany right now. So with Qonto now coming, it's really another proof that there is a market. However, I think the market is not as broken as it might be in France and especially the UK. Having said that, Oliver, I would be so happy if the German government threw some money at us. I mean, no offense, but and it was a process and you won, so congrats to that. So obviously the market is not as broken as in other countries. However, there is a couple of things missing, and I'm happy for everyone who supports the community to get the services up and running. At Kontist, we're choosing a bit different path. So basically we're partnering. So we're not a bank, we're partnering with Solaris, all that, and we're partnering with several accounting systems, but our take is basically look at the customer and what does our customer want, and this is why we're going like really customer-centric. We do have a customer who on average spends 25 days a year on managing his finances with receipts, with taxes, invoices, all that stuff. So access to banking is not so much the point. However, he pays for banking, taxation, and accounting. He pays like on average almost 3,000 euros a year. And we're going at, well, yeah, of course, delivering the banking, but this is not the sweet spot, and this is not what is most broken in Germany. Most broken is definitely the whole tax system. And so by automating a couple of things, and by avoiding the tax accountant and by supporting, the customer in doing this, we hope that we will make a difference in this market. So it's a different approach. We're not staying with the banking and doing the scaling thing and going international, but we're trying to really focus on a group. I'm not saying that we're not going international. Of course, there's a couple of ideas and actually, projects. But we're, at the moment, focusing on getting more money out of the individual customer, if I can say this, like economically, by automation.
Thank you.
Yeah, maybe one. So I think I really agree with Alex saying that it's more the SME revolution happening. And 2 things that you said, I believe are very true. Is first, SME is underserved. It's an underserved market today, just because traditional players could not address or did not want to address this type of market, because and that's the second thing you say, it's a complex market. But it can be as a complex market because there is different fields, different size, different type of businesses. However, if we go back to what we are all doing somehow, they are all business, and business need to spend money to operate. So the standard pain and standard needs of experience of this very fragmented market is actually the same.
Yeah.
Somehow.
Okay, be more specific on this. The same?
Meaning the pain that you have is how you make your business spend money. For us, for example, at Spendesk, the pain we address is how a business spend their money to operate. Whatever is your field, whatever is your size, this is something you need to do to be able to operate your business. You need to buy resources to transform them, right? And then bring value added on your market, on your service, and your product.
Okay. Fair enough. So maybe I'm being unfair, but Alexandre, you're going to tell me if I'm unfair. We have segmentation, clear segmentation on the use cases, segmentation on the channels, like another use case with you, and you're like of the mind of there's no universal solution, it's a heterogeneous market. There's more specialization.
But I actually do agree with Alexandre. So I think this heterogeneity exists in all the markets. So you can target, what Qonto does very well is, it targets those, a certain set of companies with a certain use case, and there's no reason to believe that these segments don't exist in other markets.
Yes, but
so I wasn't saying international. I think it's just the notion that there is a one-fits-all solution to SME is, in my mind, exactly what the large banks got wrong.
That's right.
And I think that's what needs to be addressed.
But so maybe I misunderstood what you were saying, because what I heard was if we focus on customer service, we deliver the right customer service at the right price, and that is going to unlock one country after the other. That might be too simplistic, but that's what I got from what you said earlier.
I'm not sure that's exactly what I said, but
okay. Well, tell me I'm wrong then.
No. But like I think like what we're bringing is a great product, a great service, like combined with a great customer support, a great service, and a fair pricing. And we're fixing exactly what traditional banks are not doing well. So the three things, like a broken product, broken customer support, and untransparent pricing. And that pain, from what I've seen and heard, is very similar across regions. So of course, I'm not talking about like new players, like new fintech opening here and there, but like traditional banks. If you take like German banks, Spanish banks, Italian banks, and French banks, they're similar. They're not all the same, of course, but they're similar. And so the pains that SMEs face with these different traditional players are, I think, very similar. So of course, there are some, counter examples, but that's what we've seen. And so saying that, customer support at, UniCredit is bad, you hear the same, or let's say HSBC. HSBC is present in lots of European countries, and I think lots of people complain about their HSBC SME banking, and so that's also one example of the same kind of frustration across different regions. That's just what I'm saying, and I'm saying that if the frustration is the same, the solution is, could be the same. Let's put it that way.
Okay. I think what Alexandre also said is, if there are bankers in the audience, if you're a French, Italian, or German banker, you're similar in how poor customer service you provide to SMEs. So,
I also mentioned Spanish. I don't want to.
And Spanish too, if there are Spanish banks. Oh, yeah. The more the merrier, really. I have a startup in Luxembourg.
The SocGen guys in the first row can take it.
Yes.
They're strong. I know them.
They are, but they're on their cell phones. I don't know what they're doing. Maybe they're shorting Société Générale stock.
Taking notes.
I have a startup in Luxembourg, so I would say that I have various pain points with my banking services. So I probably would concur with what you have to say. However, I think that in this day and age where there's probably an inflection point from a globalization point of view, i.e., homogeneous, or homogeneity in terms of regulation, even within the EU, it's going to be a tall order to have, same legal entities, same laws, same ways of incorporating, same similar pain points, but same pain points. And so from that perspective, again, a plurality of service providers attacking the market in different ways is what I see as like the mid-end point of the path here. No, going to like the Amazon of SME banking is going to be XYZ. I don't know if
I think one fairly obvious thing to point out is if you're interested in addressing a global opportunity, the best way to do it is actually not to be a bank, because there's all kinds of regulatory reasons why it's difficult to take a bank into multiple geographies. And the great thing is now you don't. A few years ago, we were in a position where for things to really change, people either had to divorce their old school bank and join a neobank, or we had to wait for the banks to develop technology themselves. Of course, the great thing is we're not in that position anymore. Banking data is available. It's available to others for others to use. So our approach to this is use the banking data, get it from wherever we can, and take our service into many more countries than we ever could if we were a bank ourselves.
Good.
Yeah, and maybe I think I agree with you on that, and that's the play we are also having. And for us, to give you a concrete example, it was super important to understand that this pain of payment network that we are solving was something which is very local, something that could be global. And we launched internationally our product very, very early on to see if there was big local specificities between France, between the UK, between Germany, which, and as you said, it brings more complexity into your product if you need to address this with a big layer of local specificity. And actually, what we found out addressing this free market, it's not so much the pain of the action of paying upwards, so spending money when you are in a professional environment, is almost the same. It's not your money, it's the company money. So you need to have someone that approves this flow. And then all this money needs to be bookkept in ways that can be localized. But this localization is already managed by third-party provider. So it was super interesting for us because building that and learning that during our path allow us actually to build the architecture of our product to be able to scale on a global perspective or European scaling with a very small layer of localization.
Did you want to add something? Or?
Yeah, well, I can share some thoughts. Why globalize? I mean, what's the value in globalization, right? So it might make sense in the retail area, pretty sure. In SME, as the colleague said, I think, local laws are, really distracting, and I find it pretty unattractive actually to do it. And I would like to see someone doing it, however, would I do it? Not at all. So the question is there any value and money in that as well? Or do you just throw out, for an equity store, it always sounds, like really sexy. You do like the global SME bank, that's really cool, and maybe someone will buy it. I don't know if there's any VCs in here. Not so sure if they would, right? Because there is, after all, there's not so much money to be made by that. So yeah, I'm a bit underwhelmed by the idea of building a global SME bank. Yeah, I'm quite happy if it stays a bit heterogeneous. At the moment, we're seeing a lot of things happening. There will be a phase of consolidation, but then at the end of the day, we'll come up with still numerous service providers who really fight for the customer, and that's basically how it should be.
So, huge market, right? It seems that each one of you are in agreement that the market is so big, even though there's like different types of sub-markets, that there's space for you as well as similar startups to, to feast on on those market shares. And at the same time, you're not too worried about large banks because of poor customer service. So is there anything that keeps you at night from a competitive standpoint? Is there any danger lurking of like other competitors other than those startups that are similar to you and those large banks that are sleeping at the wheel that are going to eat your lunch, or is it smooth sailing?
Okay, spontaneous one. I'm not afraid of the large banks. I'm afraid of my customer, actually. First of all, getting him, keeping him, making him happy, and it sounds all very, very generic. But if you're a new kid on the block, basically it's all about brand building, building trust, performing. So that really keeps me awake. From the banks, not at all, because well, as the way we are sort of set up, it's not about banking so much. And so the banks cannot do what we're doing anyhow. So, probably partnering with banks or banks partnering with us would make sense. But banks are, if I do only 15 to 20% banking, then a bank is not my competitor. It's much rather the tax advisor or something like that. But my customer keeps me really awake, because even if we are like sort of focusedly serving the iPros, there's so many different groups within the iPros liking to have so many different things. So it's really hard to always weigh out who you make happier first, right?
You're about to say something.
Yeah, so I was just saying I would advise everyone not to have sleepless nights, right?
Fair enough.
That's not good for running a business, because you make the wrong decisions. But I think the real thing, in terms of existing banks and the competitive threat from them is, look, if you look at the UK, let's look at some numbers, right? When Tide started, we had a market. So in the UK, we separate the big five. And then we have a challenger scene that is made up both of digital players and and traditional players like Metro Bank, etc. So you can sort of estimate by various announcements of how business current accounts as a metric sort of stuff. We used to be at 95, 97% concentration by the big ones. We are now down to 85. So they're very rapidly retreating. However, we are seeing, and I'm not going to publish that here, but some of the banks are actually holding on better than others. So our thesis, they are in retreat, and as a matter of fact, they need to up their game purely to start avoiding the attrition, right? The second thing is, you mentioned earlier about heterogeneity and what banks are focusing on. So traditional banks, the big banks, and apologies of any, I have to out myself as an old banker myself. You focus on the more mid-sized and large small businesses, and because that's where you can lend to, that's where you can optimize your revenue. However, and it would be interesting whether Qonto has the same experience, we are mainly able to attract people, the vast majority, about 70%, are new to market companies when they come with us, and we now actually see them growing. So in a way, what happens is there is the frog in the water, warming water effect, that we actually have the winners of the next cohorts in our portfolios that will become the larger, smaller ones, the mid-sized companies of the future. And once they're in our portfolio, generally they don't switch away. And I think this is where a lot of the dynamics of the banks, where they're missing the trick, they need to stop the attrition, and they need to learn that in the past, this pool that you very eloquently put in the beginning, that just happened to be there, we sort of serviced it, and a few profitable companies then came out that we can service as mid-sized companies. That sort of dynamic is starting to erode very, very quickly in the UK.
If I can just perhaps take issue with something Oliver said. I agree with the bit about getting a good night's sleep, by the way, so that part 100%. But you were talking about the big banks losing share to smaller players. We actually get quite an interesting insight into this through our own data. So, as I say, we have 360,000 small business customers, and they're putting about £50 billion worth of spending a year through Receipt Bank. And we can see from that a proxy of the share of the big banks and the smaller banks and how that's changing over time. And we don't actually see it changing much over time. And I think what that says is the real measure of market share that we should be paying attention to is, of course, transactions. It's how is actual money flowing around, rather than headline customer numbers, because someone can sign up for something very quickly and not necessarily use it. And that's why we regard it as being so important to not rely on banks doing anything in particular, but we love the customers of the traditional banks. They're welcome to come and use Receipt Bank to do things that their own bank wouldn't do for them. But we don't see the market share picture changing that dramatically at the moment.
Excellent.
Yeah, maybe 3 quick points. I think similar to what Oliver was describing, about 30% of our clients are incorporating companies that get started with us. So of course that's a quite a significant chunk of our clients. But 70% obviously are existing clients that are not super happy with their traditional bank, so we really have both. So we're not only getting the ones that are getting started. And the second point is I'm not really too worried about like traditional banks for lots of reasons that we've already discussed, but mainly because I think they have lots of constraints that makes it very hard for them to be agile and move fast and so on. And the third point is, to answer your question, I think what keeps me up at night is attracting and motivating the best team, because in the end, that's all what matters. Today, we have 200 people. One of the big challenges for the next 12 months is to hire probably 100 or 120 people. And even though we've raised quite some money and so on, like that's still the big battle, if I may say, is actually to be hiring the best talent, motivating the best talent, and making sure we keep this agile company that makes us, very fast. And of course, speed is probably the key thing that we need to keep if we want to offer a great service and not be too worried about competition.
On our side, it's different. I mean, competition is not coming from banks. Banks move in the SME is more an opportunity for us. We are partnering with them. We can partner with them. We've got complementary offers. That's today things that we are doing with traditional banks, regional banks, where actually we've got we are shipping with them packages for their customers, where actually in their offer they are not capable to serve. It's all about service, and actually it's working super well. So I don't see them as a threat, but more as an opportunity for us to develop faster our business.
Fair enough. Although the partnering part is very difficult.
So that's true.
Different cultures.
That's true. It's all about, so what we've learned on that, it's hard when you try to partner on a technical perspective, but when you get the sales of banking involved on a commercial perspective, it's working pretty well. But you don't want yet, as a startup or as a scale-up, entering in the technical specificities of a traditional bank.
Fair enough. I have not heard an answer on what keeps me up at night is the potential for some type of lending product that would take as wildfire within various types of verticals or types of use cases for SMEs. That would be the leading product or the leading service that would get SMEs to move to that new provider, right? You have business, tax services, banking, payment services. You approach it from like the legal entities, and you go with like a better customer service. But at least I just moved to Europe. I've been living in the States for 28 years. The lending part is the leader for SMEs. If you provide them with these types of products, so that you get them to grow with less friction, then there's a higher probability that you're going to move from the traditional bank that they've been banking with.
So a couple of things.
Yeah.
So first of all, here you've got 2 product verticals who, of course, look different, and 3 people that have horizontal business systems, so they probably answer these questions very differently. So the notion that SMEs all want lending is actually something that's true. So Tide, just as a thing, is we have about 500 million in deposits on our things. So a lot of people that sit. A good example, if you want a persona to that, the IT consultant that basically has their own limited company that runs through it. You couldn't, chase them if you wanted to give lending to them. So there is about, in our estimate, depending on which cohort you look at, how young the companies are, there are at least 35% that definitely don't want any lending. They're very cash rich, as a matter of fact. There is a third that really you should not, right? You do mislending if you lend to them, because really what they need is equity type finance. I'm just starting out. And actually, honestly, the way we've seen this in the UK going very astray is people giving personal guarantees, so effectively taking out personal loans to do quasi-equity. And then there's another third, and again, this depends by cohort, that is truly credit-worthy and able to do that. And what we've seen is Tide, of course, starts at the lower end, and then to Blair's point, our transaction volumes grow. So just to say, we now do about 12 billion of transactions, even though we, probably this is rising at twice the rate of our customers. So the portfolio is developing into that. In the early stages, and would be interested to hear the Qonto view on this, it's really about transactional credit. So can I have an overdraft? You know, can I have a corporate credit card? Can I do this intermediate financing? Really investment loans or larger working capital at early stage companies is really taking equity risk, right? Which is, in the end, ends up in, you know, in tears. And therefore, what we've really seen is that, interesting, by the way, for those that want to look at statistics, look at the BCR, this, you know, this government fund. They actually show what sort of the lenders have done to break into SMEs, and there's actually one big competitor of Tide that has completely failed to deliver a 1 billion commitment, because they've actually learned that the customers that are at the smaller end are just not credit worthy to that amount. So I would just challenge that to, and the thing is to answer, to attract new businesses. I'm actually completely, the experience is very similar to the Qonto experience in France. It's about helping people to quickly open accounts so they can start transacting, being in business, maybe helping them to register their business very quickly. Much more important than giving to those sort of companies lending upfront. That's later in the life cycle.
There won't be a great debate because I totally agree with what Lever just said, so I won't be adding much.
Good thing of having broadly similar business models. Maybe it has your thesis of that France isn't quite as different as the UK, although there are a lot of people that probably would disagree with that now.
Well, also to support Oliver, but maybe some facts and figures. German market, generally, us Germans don't like to take credit. So we have a credit card, we have 40% of German people only have credit cards. We do have a debit system in place. And they're not even like real credit cards. They're basically charge cards, most of them. So second of all, our customer, i.e. the freelancer, the iPro, earns on average 6,922 euros. Nice. That's the freelancer study with facts, or a survey from Germany, Austria, and Switzerland, a recent one. So I'm completely with Oliver. It's about short-term liquidity. For that, most likely the overdraft is perfectly enough. And I think in terms of notion, the customers tend to be like really afraid of taking credit, and they want to know at any point in time how much their like liquidity is in like real time. And if we can then serve them with an overdraft, that's fine. I mean, we have with our we are not offering lending at the moment, and we do not yet, but we're working on it, offer an overdraft, and we have in our, you know, most expensive product bundle, we have an NPS of 84. So obviously they're not missing much, right? So I'm completely with you. It's completely exaggerated. So, and I mean, you can see it. I mean, we could have someone like from Aux Money or however the lenders are called around here, and I'd like to hear how he thinks about it.
Adrian, and then
the way we think about credit is it's obviously just a subset of the broader category of cash flow management for small businesses, and the real tragedy is something like a quarter of all small business bankruptcies are avoidable if cash flow management was better. So it's not because the business had a fundamental issue, it's just because they were very bad at managing their cash flow. The key thing that we try to do is use our insight into the future to enable the accountant to give better guidance to the small business on what they should actually be doing. So, you know, the problem with accounting historically is it's been kind of captured by compliance. So it's been like financial archaeology, telling a business, you know, what things used to be like. Now we get in millions of invoices that are a view into costs that the business is about to face in the future. So we're really trying to go beyond what's been possible in the past to give small businesses a view into future cash flow, so that their accountants can give them the right sort of advice and really help them to avoid unnecessary bankruptcy.
I was just going to add that SME clients, as any client, like consumer clients, probably would prefer to have everything, you know, all great services under one same roof. But because they can't find that today, and because actually all the services that they get under the traditional bank roof are all somehow broken, you know, they do the unbundling themselves. So like they go to Qonto or Tide or whoever for their, you know, current accounts, and then they go to some other maybe dedicated service for lending. So it's not that they have, now they have choice, and they can go to several, let's say, niche players, although we're not exactly niche players, but if you see what I mean. And so like they do their, like the selection themselves, and they're not waiting for someone to do exactly the whole range of traditional bank products. And so that's also how it's happening. So like some of our clients don't need credit, and they don't have any credit, and some who want to have credit either do it with their traditional bank, or can also have some new player doing that. So that's also another way they get credit.
Adrian said something that reminded me of the previous panel that I moderated on is technology, or can technology change the bank's future, right? And towards the end of the discussion, we discussed the operating models, right? Solutions, technology solutions, and the likes that help optimize cheaper, faster, and so on and so forth, right? So you make more money by doing by consuming less, right? Operating model optimization, and then business model optimization. I think that you alluded to this by saying we're like providing insights into eventually an SME doing something different than just like I'm being faster, I'm making more money off of the same. Is it something that all of you are seeing on your roadmap to, scaling, providing these added services that will really transform the way that SMEs work, as opposed to we're making it easier for them to work in the way that they are currently working? Rodolphe.
Yeah, but, I totally agree with this point. And maybe one of the things where we help our customers with today is really how they can bring more decentralization in their way of working. Traditionally, and when it's about money, we are talking about money there, something super emotional, something that needs to be controlled, and even more when it's not your money you're spending, it's someone else's money. I guess that everyone in the room, if they give access to their bank account to someone else, that could be a little scary for them, but in a company it's the same. You allow people working for you to spend the money which is not theirs. And so one of the a new way of working of SMBs, and for us it's more when this really starts growing and having people working with them, is how actually you can empower people to make the decision they need to make in their daily work without being blocked, without being having to wait for something. With the right level of control that hedge the emotional aspect of money. So that could be one, for example, that we see and as a need for these businesses to evolve in this way of operating.
Anyone wants to add? No.
I would just absolutely echo it. As a matter of fact, Tide, we would not even call ourselves a bank or banking service. We're actually a financial platform. So, it starts with, I think what Adrian was saying, cash flow and all these problems have to do with your entire, say, financial operating system, which the vast majority of SMEs, especially those that don't have a formalized finance function, so the vast majority, don't want to engage with. And that's why people can fail, not because they necessarily don't get credit, they're just not on top of things. And so a lot of things that Tide does is integrate, just making sure, like when you have an invoice, you can chase it. You see all your open invoices. When the money comes in, you attach the invoice to it, so it goes automatically into your accounting system. So all of these things that save you time, and then we try to create alerts and so on that people understand when there are issues, with their, if you want, their financial system. So we actually think it needs to go further because at that level where you don't have a formalized finance function, in general, the business owner or their trusted lieutenant, who's often, like say if you have a restaurateur, you typically have a trusted lieutenant who also does purchasing, the menu, the staffing, etc., right? They don't want to spend time on this, right? So advising them, sending relationship managers doesn't work. It's really about making non-clunky, very easy to use on the platform. So it's not about giving advice, but actually making it happen, making it highly usable. That's at least our experience, and we're working very, very hard on, making that even better.
You were about to say something.
Yeah, to add to this, I would also challenge that the customers should need an accountant in the future. They should need one. Why is that? You can all
Did you
automate.
say they shouldn't?
They should not, definitely. I think this is the next thing that will go away. And this is what we basically aim at also. You can automate like basically everything. You can do contextual advice like Oliver said, and you shouldn't also need a tax accountant. So that can all be automated, right? And I mean, due to legal reasons, you still have to be a tax advisor. But, well, I'm not saying we're going to change it like tomorrow, but maybe the day after tomorrow. I think one issue for our customers is also pretty important, and that apart from the financial advice, they do have some sense of community. So we founded a foundation. We have the Kontist Stiftung for citizen entrepreneurship in order to foster entrepreneurship, well, in the politics, because there's a lot of disadvantages at the moment for the self-employed in Germany when it comes to health insurance, parental leave, all that. And we also go into the education area, so we have some dedicated resources put on, the community. And we also have a mentor program that we will, in a short time, make public, so other people can also learn from what the founders have experienced. So it's more than that.
I want to give some time to the audience.
Just
very
briefly,
quickly.
yeah, I mean, look, I've worked in technology businesses for 20 years, so I love technology, but I do think it's a depressing world if there's no room for the human being in this. And I think the thing that can't be automated is trust. Businesses often have a trusting relationship with their accountant who has a completely different skill set from them. And I think there is an important role in the future for using technology to help the accountant add a huge amount more value and really use that position of trust to give candid advice to the small business owner that is not the same as a notification.
So we have a bet here, right?
We do indeed. Will there still be accountants in 10 years' time?
Save the accountants. First the whales, then the accountants. A few minutes. Any questions in the audience? Be brave, raise your hand. I will hug you afterwards.
And always remember, it's hotter up here than down there.
Yeah.
A lot.
It is. Anyone? Bueller? Ah, there's someone over there. You have there we go.
Fred from ING Ventures. So if data is so important to your businesses, what are you doing to sort of really mine and capture that data of your clients, of the SMEs? And is that a strategy that is part of your roadmap in terms of building out and getting access to that data? Or are you following more of a partnership model to achieve that objective, if indeed you agree with that objective?
An answer? Anyone?
I mean, we're really step one of that on that topic at Qonto, so I don't have much to say for what we do today, but I think what we plan on doing in the future is, helping our clients have a much better understanding of what their business is, what their cash flow, forecasts can be based on, obviously based on the history, but also, helping, as I was mentioning, we have 30% of our clients today that are, incorporating companies, and if you start up, I don't know, a restaurant or like or if you're an architect, whatever your business is, you might be interested in knowing what a typical architect makes a year, or what types of, costs they have, like expenses they have and whatever. And so one thing we'd like to be able to offer in a couple of years is some kind of a benchmarking or a, tool that helps you as a new business owner, make your business plan, potentially, know how much you could make, or how much you should take into account the cost would be for your, to run your business and so on. And so there are obviously lots of tools you can think of, using data, of course, with all the, anonymized and so on, but like, that can be very helpful for a business owner or for a small business.
Yeah, our approach is just to have incredible proliferation of submission methods for data, so it's very, very easy. So we have Dropbox, you can just leave it there and we pick it up. We directly fetch invoices from some suppliers. People can use our app to scan something on their phone and send it in to us that way. People can email it in. So we just make it incredibly easy. So we're ingesting something like 50 different fields of information from our clients every second. Tens of millions of items every month, and using machine learning to mine that. So it's absolutely central to what we do.
Well, you're GDPR honeypot. Or maybe after Friday you won't be, I don't know.
Don't get me started.
I'd love to take another question, if someone has a question. There we go.
Many of you have raised a lot of money. How do you make money and how do you break even?
That's more than one question, by the way. But
No, but it's all. I'm very happy to yeah, I'm very happy to take that, because I think I'm actually really glad to take it, because I think we just need to put absolute pay to the notion that everyone that's in fintech doesn't have a business model, and a business model to me means you know how to make money, right? So that's the first notion. Second notion is, as far as Tide is concerned, we actually don't only look at unit economics, which is sort of the main investor focus. We actually quite like the concept of structural profitability, and it's a very simple thing. You take your entire fully loaded P&L and you adjust it for two things: marketing cost at replacement rate, so not at zero, but like to replace them, because small businesses churn, they go out of business. And secondly, no forward-looking technology, so really just the technology spent. So on that basis, Tide is profitable today, right? Just to give you a feeling, by the year end of this year, our run rate on structural profit will be very high digits per month, and it will go from that. So that's number one. So we're investing significantly in growth, and that's the story we have with our investors, that we say, look, when they say, Oliver, what's your burn rate? I say, what's your growth rate? Right? Because in the end, I can spend a lot because marketing goes out today, and I know that I'm getting everything back within 12 months. Right? Or I can grow very slowly and then I can show a profit. So you tell me what the growth rate is and whether you want new technology investment. So that's how we steer it. Now, how we make money, we are a platform. So at the moment, traditionally, the majority of our revenue were payments, and it increasingly comes from additional services. So despite credit being relevant only to a subset, roughly you can think of our revenue as 1/3 payments, 1/3 credit, and 1/3 everything else, from subscriptions to payroll to other sort of things where we make revenue.
good. All right, time is really up. So thank you very much to all of our panelists.